Hey, hello everyone. I'm Caleb Newquist. I'm the editor at large at Gusto. And welcome to this webinar featuring Gusto and Bench, what you need to know about PPP Round 2, applications, forgiveness, and tax implications. I will be your host today, and but I am being joined. Oh, I guess we're gonna do some housekeeping, I guess. I'm sorry about that. Uh, Got to do the housekeeping. So just a handful of things. Of course, thanks for joining. We're live on several platforms, so hang in there. If something happens, occasionally things will go down, but they usually quickly recover. So please be patient with us on that front. If you have questions, please leave a comment in whatever platform you're on, and we'll be sure to get to it if we have time at the end. But rest assured, those are being monitored, so that it's a good place to drop your questions. During the Q&A, not every question will be answered, but we'll do our best to get it to as many questions as possible. We know that lots of people have questions about PPP. And finally, look for more resources in the description of this event. So that's our housekeeping. And now I can talk about the featured attractions of our show. Yes, I am Caleb Newquist. I am just your host, but I'm also being joined by a couple of experts today that are going to talk about PPP. First of all, Brendan Title, he's a tax advising expert with Bench, and my often partner in crime, Will Lopez, head of the accountant community here at Gusto. Gentlemen, so great to have you here to talk about PPP.
Good to be here.
Great. So just a quick overview of what we're going to cover today. We're gonna do an overview of the second round of the Paycheck Protection Program. We're going to talk about the application process and forgiveness. Those are the two, I think, main areas that a lot of people have questions about. And then finally, we're going to talk about some tax implications to wrap things up, which is, again, really important at this time of year as people are starting to get their heads in the tax game for their annual filings. So getting right into it, not wasting any time, PPP Round 2, what's new under the latest stimulus package? And I believe, Brendan, are you taking this first section or is it Will?
I am.
Yeah, Will Lopez, take it away.
Cool. Well, thank you. As you're, let me fix my angle here. As we're trying to unpack everything that's going on in this webinar, feel free to drop in your questions. Once again, just want to encourage you to scatter them throughout the webinar. Don't wait till the end. And we could try to answer them within the respective section. But obviously, there wouldn't be a round two without a round one. So let's do a little bit of a look back or a throwback to round one. Round one, those times are tough, still tough out there. But when you think about who's eligible for the PPP, obviously small business entities with 500 or fewer employees, right? Not-for-profits, veteran organizations, tribal concerns, self-employed individuals. A lot of this has remained the same over time and has actually expanded with the new round two. Now, entities, for all of you that have more than 500 employees, obviously in certain entities do meet that SBA industry-specific guidelines and standards. The loan maxes, when we looked back at round one, 2.5 times the average monthly payroll cost, there was this huge formula that you had to do. I remember that very vividly, very manual at first, and then hopefully over time it got automated. Gusto helped with a lot of that. $10 million loan max on those loans. And then when you looked at the timing of the round one, obviously it expired on August 8th, 2020. And then there was a little bit of a delay in trying to get the round two passed. So let's skip over to the next slide and let's look at the overview for round two. So under the new package, when you're looking at the new package, first draw borrowers, that is, must meet the previous first time borrow requirements. So first draw borrowers are those who drew first, right? You still have to meet a lot of those standards, a lot of those requirements. Now the second draw borrowers must have less than 300 employees and sustained a 25% drop in gross revenue, which is a new little nuance of round two. Obviously, there was a lot of drop of revenue for probably many of you, more than 25%, and for majority of small businesses all across the United States, huge hits. But you have to sustain or at least have a sustained drop in revenue of 25% in any quarter of 2020. Probably really easy to do, especially given this current state of 2020. And the max loan amount is $2 million. So a drop in the loan amount, but also comes with some easement as far as like proving out that your revenues did drop. Now, all businesses must have been in operation on or before February 15th, 2020. And food services and hospitality companies have special per location provisions and maximum loan multiples. I would work very closely with your lender, make sure that obviously your unique situation and your company's unique situation meets all the requirements that they're looking for to help you get the loan that you deserve. Now, if we switch over to the key PPP updates in round two, they include basically six things. Number one is the PPP borrower can set their covered period by any length of time between 8 weeks and 24 weeks, which is great. And then the new one, or at least the round two, covers additional expenses that round one didn't cover. So, including operational expenditures, right? Property damage costs. There was obviously those riots that occurred over the summer last year. Um, Businesses were really hit hard during tough times when they were closed. Supplier costs, worker protection expenditures, so on and so forth. Now, there is new eligibility, which it was expanded to include 501c6s, which are those housing cooperatives, direct marketing organizations, and other type of similar organizations, which is great. And then round two obviously provides just greater flexibility for seasonal employees, or employers. I remember when round one got off the ground, there was a lot of confusion around the seasonal employers. What do we do? What happens if I open up my business opens up in the summer? Round one was launched before summer hit. What do I do there? And so now there's deeper flexibility with seasonal employers, which is great. More details to come on that later. Don't want to spend too much time on it. And then there's certain existing PPP borrowers can request to modify their first draw PPP loan. Work closely with your lender on that. Same thing. If you took a first loan, you are eligible to apply for a second draw PPP loan. And there were some questions where, do I have to pay my first one back to access the second one? I think my understanding, and Brandon, feel free to correct me on this. I believe yes. Well, I'm sorry. You don't have to pay off the first one to access the second one. I do believe you can go both, even if the first one's open, which is great. Now, looking at the first draw, there are some new things that round two did add to the current state of affairs. So, as far as eligibility and maximum loans, pretty standard across the board, right? What was new in round two is the timing and who it was good for. So as far as the timing is concerned, applications opened for certain businesses and lenders January 11th, so that happened 16 days ago, and will be accepted through March 2021. So if you have not applied, you should work towards applying. You still have time. And but the close window most definitely is March 31st, 2021, unless they expand it. Who knows at this point what may happen? And then who it's good for? Well, businesses with fewer than 500 employees and groups underserved and or ineligible in PPP round two, which is great. There's a long definition for underserved, but you'd want to do a little bit of research, and we'll be able to provide you that after the webinar. Now, if we look at other items that were added to it, so more details of the second draw that were new. Now, what's interesting here is borrowers who previously received PPP loans and has used it or will use the full amount for authorized uses. Once again, you have to have less than 300 employees. Max loans, 2 million. Accommodation and food services, still the same 3.5 times the monthly payroll cost. Timing window still there. And then what's a little bit more specific this time, based on the percentage of coverage of expenses. And I believe, was it 80-20 last time? I believe it was 80-20, something like that. In this case, I think it's 60-40. So PPP borrowers who have spent or will spend all their funds on authorized expenses, 60% payroll costs and 40% approved non-payroll costs. So more leniency on the non-payroll cost and a lower threshold for the payroll cost. Makes sense, right? The first one was really about ensuring that your team was taken care of, that a lot of your payroll needs were taken care of, because we were, obviously a lot of states and across the U.S. were totally shut down. There are still waves of shutdowns, But for the most part, a lot of businesses are open at slight capacity, but are able to compensate for that payroll that they have. So they've lowered the payroll threshold and increased the non-approved payroll costs. So just details there. As we look at the expanded eligibility for round two, you'll see basically some pluses and some minuses to it. But let's uncover the pluses. Yes, changes were made to expand PPP, right? The 501c6s, the DMOs, housing co-ops, newspapers, broadcasters, radio stations. Now, some changes were made to prohibit from PPP venues who take shuttered venue grants. So just a little bit of a nuance there. If they're receiving funding from other grant sources, particularly shuttered venue grants, that could be a detractor for or an issue for you in getting the PPP round two. And then some restrictions for publicly traded companies. Makes a lot of sense there. Market's doing really, really well. So there was some revision work that happened in round two to help, get more funds to the right parties versus, publicly traded companies where the market's at an all-time high. Obviously, check to see if your business is considered small using the size standard tool at sba.gov. So they have a great resource there for you to access. That's sba.gov. Lastly, let me run a poll question before we toss it over to Brendan, who will cover how to apply. Overall, just really want to get a sense of how confident do you feel about applying for PPP round two, right? Are you feeling very confident, somewhat confident? You have questions, or just a dead honest, please help me throughout this whole thing. So we'll give people a little bit of time to answer that polling question before we transition over.
Will Lopez, question for you. How do you do you feel like this most recent this new I guess the new legislation that this most recent round, did it address a lot of people's concerns in your mind, or how do you feel about this kind of the enhancements or revisions that were made? What's your sense of it?
Yeah, I think so. I think where there were a lot of concerns and complaints around um, access, what do I file, what reports do I give, what about seasonal employers? And I think the major confusion was really around independent contractors, right? Schedule C work, seasonal employers. And I think for a majority of small businesses that are out there, majority of them do operate as sole proprietorships.
Yep.
And so there was a ton of confusion in the first round. And in the second round, I believe they addressed a lot of those concerns. They've lessened, I think, a lot of the barriers to jump over, really easy to apply. And what's also great is round two really took into account the real expenses that were not around payroll, right? And so a lot of round one was really focused on payroll and very little on non-payroll costs, whereas round two feels on theme with, okay, we're kind of back open for business, but I still have a lot of those hard costs that are not payroll related. Think about it, especially restaurant industry, right? You have 40%, let's say, max capacity within the venue, maybe 25% in certain states, and you still have 100% of your rent due, utilities
Right.
due. And so it's great that they kind of added more flexibility in the non-payroll costs.
Cool. We've got some results from that polling question. A majority of the audience, 57%, are somewhat confident, 18% very confident, 22% have questions, and 3% are they fall into the please help bucket. And that's what we're here to do. Is we're here to help. So we're going to keep moving because there's a lot of content to cover. And our next section, the application process for first and second time borrowers, we're going to turn it over to Brendan Title. Brendan, take it away.
Yeah, so let's get into first-time borrowers first. If you did not receive a PPP loan for that first time around, the applications ended in August 8th. Maybe you didn't manage to get one. We had a couple of businesses where they were questioning how much they really needed the PPP loan. And of course, their circumstances have changed and now they're in dire need of that PPP loan. So if you're looking to apply for that first PPP loan in 2021, this information is for you. The eligibility requirements are going to be pretty much the same as they were in 2020. You still need to be less than 500 employees. We'll reference that SBA guide on what entails being a small business. So by all means, check that out to make sure that you do fall into that categorization. But unfortunately, there were no changes for the sole proprietorships, the self-employed that had a negative net income in 2019 or 2020. And unfortunately, if you're a corporation without payroll, again, the PPP did not change its structure at all to really address those cases. And then additionally, most passive income companies will also still likely not be eligible for the PPP. So we didn't see any changes there to open up that eligibility to new businesses. However, if you were a business that missed out on that funding, now's your chance to hop on it again. And then moving on, for first-time borrowers, it's best to try and apply through a lender that you have an existing relationship with first. The obvious reason being they have your information on file. It's going to be an easier, more streamlined process. But of course, you don't want to put all your eggs in one basket. Some businesses, if they had a poor experience with the lender, maybe they didn't manage to get the application in before August 8th. You're going to want to try and shop around. And if you're going to shop around, try going to different types of lenders. Go to a local bank, go to a fintech lender, go to a bank that you've worked with before. Going through multiple lenders is going to increase your chance of receiving funding and make sure that you have an opportunity to get that application in before any funding runs out. If you were a corporation, start collecting those payroll forms that you've been putting in the filing cabinet. If people still work on paper, you've probably on digital now, but start collecting those payroll forms. Start collecting the IRS forms 941. That's your quarterly payroll tax filing. If you're a sole proprietor, partnership, or a 1099 contractor, get that Schedule C, that Schedule K1, or the 1099 MIS forms to apply. Now, granted, you're going to be able to use 2019 or 2020 numbers. So for the Schedule C, the Schedule K1, those forms that you will probably not have filed yet or started preparing yet even, you can still apply with those numbers so long as it's a tax-ready version of those forms. So it's best if you're going to be drafting up one of these forms to do so with a tax professional. The maximum PPP amount you can receive is 2.5 times your average monthly payroll or the average monthly self-employment earnings. So you can find those monthly self-employment earnings by taking your net income off of any of those forms and dividing it by 12. The partnership calculation is a little more complicated, so I'm not going to go into it right now, but check out one of our blog resources on that. We go through the calculation very explicitly. Now on to the second draw PPP loans for those businesses that did receive a PPP loan. They used up all the funds and now they're needing additional funding. There are those changes to the eligibility requirements. Now it's going to be less than 300 employees. And you have to prove at least a 25% drop in gross receipts. And that's going to be from a quarter in 2019 to that same quarter in 2020. So if you're going to be looking at Q2 2019, you got to look at Q2 2020. For businesses that were not operational for all of 2019, you're going to have a little more flexibility there. For businesses that started up in 2020, you can compare your revenue to that first quarter in 2020. Borrowers that are applying for a loan greater than $150,000 are going to need to provide those annual tax forms or quarterly financial reports to prove this 25% drop at that point of application. And the quarterly financial reports, that can be an income statement, but it's going to have to be corroborated with bank statements as well. There's that additional document requirement. However, if you're applying for a loan amount that's less than that, they're not going to be asking for any documentation at that point of application. However, they are still going to be able to ask for those documents at any point in time between that application and you applying for forgiveness. So you're still going to have to apply hand in those documents to the lending institution, but just not at that point of application. So you can move on an application now and worry about the document prep later. Just two important notes at the bottom here. Just to reiterate, you will have had to have spent the entirety of that first PPP loan or will have used all the funds before that second PPP loan is dispersed. So make sure that you've used it all. You don't have to apply for forgiveness on that, but you'll either have to have used it or be prepared to use it before you get those second PPP loan funds. And you are not required to have applied for PPP forgiveness on that first loan, just so long as you have a plan for using all the funds. Now we're going to move on to when to apply. On the next slide. Um, how long will you have to apply for a PPP loan? Well, the deadline is March 31st, 2021. But of course, what we experienced in that first round is that there's going to be a flurry of applications. And of course, this time around, there's going to be a larger size of businesses that are going to be jumping at this funding, knowing that it's a limited window. We don't know how long these funds are going to last. So as with that first round of funding, I'm just going to reiterate the same thing, which is apply as soon as possible. Don't wait until that deadline to apply, because you don't know how long those funds are going to be there. Now, you're probably wondering, where could I apply? What's going to be best? And we do have some information on that for you. That next slide. There's going to be two different application forms for first draw borrowers and second draw borrowers. And if you're planning to apply this round, there's going to be a list of confirmed PPP lenders through the SBA's resources. You can look at CDFIs and MDI lenders. CDFIs actually received a large portion of this funding specifically for them, so they can address lower income areas or businesses that are going to be needing more of that financial support. And then, of course, fintech lenders. We saw PayPal offering PPP loans. We saw Square offering PPP loans. And with these fintech lenders, everything's handled online. You can just do it through their own application process. It's streamlined. So there's a lot of options for you in terms of where you can apply.
Okay, so we're ready for our second polling question, and it should be available for you to participate now. Which option best describes where you are in the PPP application process? So please let us know. Brendan, just from your expert point of view, how is the application process has it improved? It's kind of the same question I asked Will, is like, do you feel like it's simpler than it was the first time around? Have they ironed out kind of some of the kinks? What's your sense of the application process?
I like to think that it's simpler, but I also think it's because there's a lot more resources out there that you can refer to guide through the application process. The application forms themselves are relatively the same as that first iteration, but now they know what the holdups were that first time around, and they've made that information more easily accessible through the SBA's resources. And of course, lots of fintechs are even having their own resources on how to calculate this information. So it's definitely easier right now, just because a lot of the questions that came up in that first round of funding have been addressed. The guidance has been released. Information is a lot more explicit. So we're going to see less of that madhouse around that first round of funding, where everyone was just even trying to figure out how to calculate the average monthly payroll costs. Now payroll providers like yourself are actually providing documents to make it easier. So while the application itself is not necessarily made any easier or changed significantly, the environment around the application process is significantly better, and it's a lot easier to get that support on anything that might have been a hang-up before.
Yeah, one important thing that you noted, I think, for the audience to keep in mind is the CDFI and the MDI resources. Their funds were earmarked specifically for those kinds of lenders, and there's a lot of good resources around those types of lending organizations online. So check those out, especially if you don't have a current banking relationship. I think those CDFI and MDI lenders are a good resource for folks. We're just waiting on some poll results, but as we're waiting for those, let's see.
I can actually tackle a question while we wait for that.
Oh yeah, that'd be great. Will Lopez.
Yeah, so I think Nicholas Kittle submitted a question that basically said, if we opened in February of 2020, how do we show that 25% reduction in gross revenue, which I covered in my segment? There's a lot of options for those who were partially open in 19, fully open in 19, or not open at all during 2019. So for your particular case, Nicholas, if your business was not operational at all during 2019, but you were in operation on February 15, 2020, your option here is you can compare your revenues from the second, third, or fourth quarter. of 2020 with the applicants, with your application revenue during the first quarter of 2020. So basically compare your second, third, fourth quarter with the applicant's revenue during the first quarter of 2020. And you could see some fluctuation within those 4 quarters that your revenue had indeed declined by 25%. So you don't need to be open in 2019 to do that comparison work, but you have to have been in business by February 15th, 2020 in order to do it. And you can use your quarter 1, January through March of 2020, and compare any of the following quarters with that quarter to show the decrease in revenue.
Great. Thanks for answering that question. We've got some poll results. 25% haven't applied for a first draw. So a quarter of you are looking to do that for the first time. 40% planning to apply for the second draw, but have not yet. 15% have already applied for that second draw, and 12% have applied for their first. And 4% of you have already got your second draw. So y'all are Johnny on the spot. Good for you. I think we're ready to get back into the content with forgiveness, and we're going back to Will Lopez because there's been some enhancements on the forgiveness side as well.
Yeah, thanks. Pretty much what you'll see here is there's 2 major themes with the expansion. Basically, there was an expansion of the forgiveness and a simplification of the forgiveness. Now, when you look at the expansion in particular, very similar to round 1 here, you, of course, the PPP recipient is eligible for forgiveness up to the full original amount if you spend 60% of that PPP loan on those payroll costs within week 8 and 24. Now, what has been expanded as well is the expenses that you can include to be forgiven. And there are 4 major ones in particular: technology services, software, cloud computing. To me, this makes a tremendous amount of sense. What you saw in 2020 was a huge uptick in software adoption that allows you to run a business remotely, right? There was a huge boon of adoption of cloud-based technology. So that's included. Supplier costs, personal protection equipment, so PPE equipment, whether that includes more masks, dividers, there's a huge list that falls underneath that PPE, and the investment in facility modifications, right? What was obviously a trend for opening back up was making sure that your business was safe to go inside. Some restaurants put real dividers between tables in order to get back some of that capacity, not separate tables 6 feet apart, but almost literally put a full divider between tables so no one could really do anything to the other side of that table. But you have to note here that at this moment, it really is still unclear whether the new provisions expanding PPP loan forgiveness retroactives to your either current or existing PPP loan and loan borrowers. But based on the language, obviously don't hold us 100% accountable for this, but we believe it is. And I would work very, very closely with your lenders to ensure that you do whatever they ask in order to capture any retroactive forgiveness while you're doing that. So not only is forgiveness expanded, it's simplified. So 2 things here under the simplification language: for loans under 150,000, the PPP recipient must submit a 1-page form authorized by the SBA to their lender, right? That will represent that they had indeed spent 60% on payroll costs and how many employees were retained because of that loan. And then secondly, for loans greater than 150, other than the changes to eligibility or eligible expenditures, there's no other major changes. So for those who got a lot more than 150, pretty much business as normal. And then what you get is the expanded expenditures that you get to add into the pot there. For loans under 150, you need a letter from the SBA, authorized from the SBA, so you can give to your lender saying that you indeed spent that money on payroll costs based on the percentages. Moving along here, what's not changed? Well, 5 things in particular: 60% of the PPP loan will need to be spent on payroll, right? So basically a percentage needs to be proven and spent on payroll. Pretty straightforward. All eligible expenses must be either paid for or incurred during the covered period. I think Bench could really help you with this. This is very accounting language to me. Paid for or incurred basically says cash basis or accrual. And so you would have to work with your books, and depending on how you're presenting your financial statements, paid for is cash basis, incurred is like accrual. But that's why we have Bench here, because they could really help you with a lot of that work. You will need to uphold full-time or that FTE, full-time equivalent, and salary requirements in order to receive forgiveness on your loan application. This is not a moment to like be, treating staff poorly. It really needs to fall underneath getting staff back to work or getting them compensated, unless applying for the PPP forgiveness using that PPP forgiveness form 3508S. The fourth thing here is, if you do not receive forgiveness for your PPP loan, you will need to pay it back at 1% interest in either 3 or 5 years, depending on your loan agreement. So if you're not using it fully according to the thresholds that they set, it ends up converting into a loan. Loan is at 1%, which is great rate, in either a payback period of 3 or 5 years, but that's really contingent on your agreement. So work with your lender on getting a little bit more visibility into what you locked yourself into. And then lastly, your business must have been established before February 15th, 2020. So that's clearly the line in the sand here.
Hey, Will Lopez, I got a question on the forgiveness that because since you touch on it on this slide, I figured now was a good time to ask it. From Rusty, the question: if my payroll in dollars are the same, but I dropped from 17 full-time employees to 11 full-time employees, how will that affect how much of the loan will be forgiven?
Yeah, and Brendan, feel free to jump in here. I think, with the exception of layoffs, the understanding of the full-time equivalent is you have to maintain a certain threshold based, I think, on the application, the number that you say on the application for the PPP loan of how many FTEs you have. Is that right, Brendan?
Yeah, exactly. So the amount that you put on your application for the full-time equivalents for that period you're looking at to determine your average monthly payroll costs, that's the number that you're going to have to maintain. So if you had 17 on that application, it's going to have to be 17 at the end of the covered period.
Yep. Obviously, I would say work with your lender to see what other accommodations they can make. I've not seen anything yet, Brendan, where people are trying to provide justification for going down an FTE or legitimate justification. Have you seen anything like that?
Not necessarily, and I know one of the complications that's arisen around this first draws of PPP loans is the fact that so much time has elapsed in this program that they did not really account for. And of course, where you were as a business December 2020 is going to be very different than when you were as a business in March 2020, regardless of COVID. So it's unclear about how they're going to treat those types of situations when there's just those influx of business needs. There are certain safe harbors around FTE requirements if there are legitimate reasons for not bringing back an employee, or if an employee refuses to come back, you're not going to be held accountable for that. So just to reiterate what Will said, work with your lender, see if you fall within any of these safe harbor requirements, because if you have a legitimate reason for your business being in having reduced employees beyond just COVID, there may be something that you can work with there.
Yeah, and I think that's pretty spot on. Don't count yourself out here, but work really closely with your lender. There is a reality where obviously FTE and maintaining FTEs requires revenue. And if your revenue was impacted and you had to make tough business decisions, I'd work really closely with your lender to see if you could get yourself underneath some safe harbors, or at least find some legitimate reasons to try to ensure that you get some of this loan forgiven. Great question. Let us run note real quick about the PPP forgiveness before we run the next poll is PPP forgiveness applications are still taking place, right? March 31st deadline. Get in there. It appears that most PPP lenders will be processing PPP forgiveness applications at the same time as new PPP origination applications. This was not the case in the first round, but now that we kind of like, we all have like our feet somewhat underneath the ground, we're actually able to do two things at once now. A reminder, there currently is no deadline for the PPP forgiveness, or at least seeking for it. However, it is highly recommended that you apply for forgiveness within 10 months of your PPP covered period ending in order to avoid making any unnecessary interest or principal payments. I know it's notorious. I've been in the accounting profession my entire career. I know it's notorious waiting to the last minute to do something like this. Don't wait to the last minute, especially when forgiveness is on the table. I've never seen anything like this in history where people give you money and it's forgiven, unless it's your mom or your dad. Lastly, reminder, it appears that you do not need to apply for PPP forgiveness for your first PPP loan in order to be eligible for the second PPP loan. So once again, you can have a first one, you can apply for the second one. You don't necessarily need it to be forgiven on the first one in order to apply for the second one. You know, just get in there, get the money that you deserve, work quickly. Don't lollygag as far as like seeking forgiveness, but really work within the confines that you have, work closely with your lenders, and hopefully, you know, the chips will land on your side. Let's run our third poll. Are you already working with an accountant like Brendan or myself? Yes, I work with a Gusto partner. Yes, I work with an accountant who's not a Gusto partner. No, I am not.
While we're waiting for those results to come in, do you guys want to tackle another question?
Let's do it.
All right, cool. Let me see. Let's keep it in the forgiveness realm, shall we? Oh, okay. Quickly. Carrie is asking, what are some of the costs covered under the non-payroll cost line? And we've provided that list. So, but quickly, especially some of the new ones, can you guys give some details on some of the new expenses that are now covered on the non-payroll side?
Yeah, Brendan, if you have it top of mind, I was going to pull up the list and see what I could run through here.
I think a big one was like was software that would allow businesses and their employees to work remotely, right? Like that was a big one.
Mm-hmm. Yeah, the software, cloud computing, the HR resources, accounting resources, those were all big ones that are now included. The PPE, the protection equipment for your employees, that's another big one. Anything that you need to install in your business to make it COVID compliant, whether it be masks, whether it be dividers, sneeze guards, whatever, that's all now covered by PPP funds. The damage from any property damage that's related to any rioting or anything like that that is not covered by insurance, that's going to be covered by a PPP loan. The not covered by insurance is a pretty big facet of that. If you can receive any sort of insurance payout for that, it's not going to be an eligible cost for the PPP. There's also those the costs from last year, which were the mortgage interest expenses, and it's just the interest portion of your mortgage payments, your rent costs and your utility costs. And the last one is the supplier costs, and that's any sort of agreement, purchase order that you had in place prior to the pandemic that you may have not otherwise been able to afford because of a drop in revenue. That's now covered by PPP as well. So any sort of cost of goods placements that you had, anything like that that is essential for running your business, if you're having trouble making those payments, the PPP loan can now cover that.
Yeah, and a big thing here is I don't think I've ever seen it in SMB history where you have an opportunity now as a business owner to totally revamp the resources your company uses for managing pretty much everything for its business, from payroll and ensuring that your team is taken care of there, from engaging with somebody like Bench, who also falls, I believe, underneath that 40%, right, non-payroll, and you know, getting access to Bench, getting access to payroll, thinking about using a lot of cloud technology to bring your company kind of up to the 21st century, where a lot of businesses and SMBs really did without a lot of that technology due to budget constraints. You can now improve your business situation using that non-payroll 40% coverage, and throwing all the cloud technology you need in there to get your company totally streamlined and future-proofed.
Cool. Thanks, guys. We got some poll results. 63% are working with an accountant, non-Gusto, I might add. 8% working with a Gusto partner, and 29% of those polled are not working with an accountant. So, hey, no time like the present. If you need that advisor, if you need some expertise as you navigate this these unprecedented business conditions. Moving on to wrap things up, this last section on tax implications. How will PPP loan impact your taxes? We're going back to Brendan, who is a tax expert. So Brendan, take it away.
And what a perfect segue. We go from talking about accountants to tax implications. And here I am. I'm still living in the mentality that it's March 2020. I can't believe that it's actually January 2021 and we're already talking about tax filing. But fortunately, with that second stimulus bill that came out at the end of December, we got a lot of clarification on how the PPP loan is going to affect your tax filing process. Now, just to reiterate, for the question that just asked about eligible expenses, here we go. We've got the list up for you one more time. If you use the PPP loan in that 60-40 ratio on these expenses, at least 60% on payroll, it's going to be completely forgiven. But there was a lot of ambiguity about what this is going to mean for the tax filing process for businesses, because if you got the loan forgiven, is that going to be considered taxable income? Are those expenses going to be tax deductible? And finally, we got answers from that is a PPP loan forgiven going to be taxable income? No, you do not need to include that in your taxable income. And if you're going to be calculating a 25% reduction in gross receipts, don't include your PPP loan amount. Don't include any forgiven amount. That's not going to be affecting your taxable income or be considered part of your gross receipts for that revenue reduction. And if we move on over to the next slide. One more back. There we go. So as I said, forgiven loan amount will not be included in taxable income or gross receipts. And then expenses are now going to be considered tax deductible. And that was a huge hang up for accountants. I discovered tax Twitter last year, which was an absolute joy seeing seeing some of the sass that these accountants can have. They do actually have a personality. And they were all just so upset with how much this was going to affect the tax filing process for these businesses that they're working with, because there was going to be so much confusion about, okay, what expenses did you use the PPP loan on? So the IRS, thankfully, they just said, let's simplify the heck out of this. Every single expense that you used a PPP loan on is still going to be tax deductible. So simply put, your PPP loan is not going to affect your tax filing process. But of course, it is still tax filing. You're probably going to want to focus on your PPP application and running your business more than anything else. So we're still here to help with any tax questions that you may have. Oh, and here we go. The perfect segue again into how we can help. If we go on to the next slide, we'll talk about how Bench can help first. As I mentioned, we've got discounted bookkeeping and tax for anybody who is a Gusto client. That's going to help you stay on top of your books. It's going to help you with your month to month, just keeping a pulse on your business. But we also offer catch-up services. So if you need to get your books caught up to prove a 25% reduction in revenue, or even just get ready for tax season, which, like I mentioned, is right around the corner, we're here to help with that. And a lot of businesses are also they're dealing with this whirlwind of news, not just with tax filing, but with these relief funds. And this is where we offer free consultations, and we're going to give you the opportunity to just talk to an expert about relief funding that's available to you, how to use a PPP loan, how to get forgiveness. Any questions you've got about whether it's bookkeeping, small business finances, COVID relief, anything like that, we've got someone who's going to be more than happy to just answer all those questions, help you find the resources to guide your decision making, and make sure that you're feeling just very confident with your business.
Caleb, I believe this is you.
Is this me? I actually don't have the information on like Gusto's current the application process.
Well, I can unpack it.
Yeah.
So
Thanks, Will.
when you think about once again, PPP round 2, and you think about the expansion of all the additional expenditures that you can capture and get forgiven, right? Cloud software, cloud technology is a big piece of that. And so, as previously mentioned, um, platforms like Gusto, like Bench, who offer, let's say, Bench on Bench's side, catch up work, maintaining current bookkeeping work, all of that expense can fall underneath that PPP round 2 and get forgiven. Gusto's platform, with all its additional resources to help you get up to speed with COVID and maintaining your payroll and offering, you know, everything that your team needs to stay afloat, even remote onboarding, right? And I think the typical response here from small businesses is to bring new employees on or bring the furloughed ones back, and or even hiring a new team requires many times for small business life a lot of in-person work, right? Here's the documents, here's the employee manual, here's the I-9, here's your W-4, and you can do all of that through Gusto. So where Gusto can help not only is maintaining a lot of that social distance onboarding of your team, but you could also streamline your PPP application, easily claim employer tax credits. So what you see here is Gusto's dashboard. On the left-hand side, you'll see that there's actually a tab there. It's a little hard to see, called COVID-19. It has all the resources that your business would need and your team would need in order to stay up to date with everything COVID and PPP. On the right-hand side here, you'll see all just a small few of the things and the features that we can offer. That is pulling a PPP application report with all your payroll figures, so you can easily apply through Bench, let's say. PPP forgiveness report. So once you get to that point where you're like, okay, I need to start working on the forgiveness aspect of things, Gusto will pull a report for you and make the calculations really easy, all the way to, you know, tax credits for emergency sick leave, family medical leave, advance payments of employer tax credits. We can help it all. Moving on to other things that we could also help with here is you'll see that you could apply through one of Gusto's lending partners. So currently we have, you know, Bluevine, Vista Credit, ACAP, Blue Ridge. And so not only can you pull the reports through Gusto to apply, you could also pull the same reports to do forgiveness through these lenders. We try to make it really, really easy for you to not only do the calculations, but then get that loan forgiven right away. So now there is no excuse to waiting too long for getting that loan in, or too long for getting that loan forgiven. So you can go to Gusto. Actually, if you go back up for me just a little bit, you can actually go to gusto.com, and there's the address right there, COVID-19, you know, paycheck protection program, to see all the details around this. And then lastly, you know, there's a lot going on, and there's been a lot going on for a solid year. I don't know how any of our heads haven't exploded yet, but if you want to get the latest updates and really try to digest this over time, it's better than just kind of like taking the full fire hose to the face. You can sign up for Gusto's all the latest updates directly from Gusto through our small business updates and resources newsletter that you can sign up for. So you can go to gsto.co/PPP updates. And you basically put in your name, put in your email address, and you're pretty much off to the races to get the latest on a regular basis. So that's gsto.co/PPP updates.
Yeah, and all those links are being dropped into the chat, and also I believe the comments, but for sure the chat. So Brendan, Will, thanks so much for your expertise. We've got about 10 minutes for Q&A. I think how we'll do this is we've got some questions here that are not super detailed, but are detailed in nature. So we'll go through those for about 5 minutes. We'll address some of these, and then we've got a quick lightning round. Let me see, what do we got? We got about, looks like about 10 questions that are suitable for a lightning round. So I think that's how we'll tackle this. So we'll kick it off with some of these questions. First, on second draw, this is an anonymous question, but quote, have spent or will spent the entire PPP first draw funds in order to apply for PPP2. So they're asking about the spending requirement for the borrowers that are looking to do the second draw. There doesn't seem to be any clarity on the timing of spent. Is this spent or will be spent by the time of application, by the time of receiving the second draw, or when the first draw is, or within, excuse me, the first draw covered period. So can we just clarify like the spending requirement in order to qualify for that second draw is the question.
Well, I'll tackle it, and Brendan, feel free to jump in there. You most definitely have to meet the requirements to get it forgiven. So I think in round one, it was spent, and I think, correct me if I'm wrong, Brendan. In round two, it's either spent or incurred in order to get that forgiven. And so there's nothing that I've seen that says you need to have spent all the money in round one in order to get access to round two, or even have round one forgiven yet in order to access round two. In order for any of it to be forgiven, you must definitely meet the thresholds in order for that loan to be forgiven, but it doesn't stop you from applying for the second loan. Any thoughts on that, Brendan?
Not really much to add. Just a lot of businesses, they've had these PPP loans for a long period of time. I don't think that the whole spent your first PPP loan to get access to a second draw loan is going to be that big of a hurdle for businesses because of that assumption that you've had this loan for, seeing as the application's close to the start of August, you've had it for almost 5 months now. I think that there's going to be just a large assumption across a lot of borrowers that, yeah, you've spent all of it. If you haven't, you start looking into some of these possible expenses that fall into any of those eligible costs, and just make sure that you have. Maybe it's time to invest in a new software, and maybe it's a time to put it towards some sort of investment to improve your facilities and make it more COVID compliant. Now is the time to jump on that. But I wouldn't be too concerned about that whole having spent your first PPP loan being that big of a hurdle. Most businesses, I think, by now will have probably used up their PPP loan.
Yeah, and I think if there's anything we're all good at is spending money. So I think we could all get in there.
Okay, great. Here's a question from Moses. Does the revenue drop need to be calculated on an accrual basis or on a cash basis of accounting, or is it just whatever you use for tax filing purposes? So I don't know if there's been any guidance around the method of accounting, but what have you guys seen? What can you say about that?
I can jump in here as the tax expert. It's going to be whatever you use for your tax filing, and that's also going to be any documents that you provide is going to be on that accrual or cash basis. So just make sure that whatever you're using to show that 25% reduction, be it accrual or cash, it's what you're using for those financial statements and for your tax filing. Because those are the documents that they're going to be asking for, and then all your information is going to be congruent and corroborated on those documents.
So I actually have a question for you there, Brendan. So 2020 just closed. A lot of people probably are in the midst or probably haven't even started filing their tax returns. How is Bench approaching its small business clients as it relates to reconsidering the tax filing method from going from cash to accrual to cash? What kind of guidance has Bench, just on a broad swath here, been doing in order to maximize forgiveness or maximize loans?
Mm-hmm. Yeah, we don't really promote the moving to accrual simply to prove like a reduction in revenue, or to try and get any of this funding. Changing your tax filing methodology is a very big step to take, and it's something that you should consider all factors when making a decision like changing your tax filing. Um, I am personally of the belief that cash basis is the most streamlined and simplest way to stay on top of your finances. So I would recommend sticking with that if that's the approach that you've already been taken, because going into accrual is going to be opening up a whole new can of worms, a whole new level of attention to detail, and it may make your current bookkeeping solution obsolete. If you have an in-house bookkeeper who can make that shift, then maybe it's something to consider. But if you're working with Bench, or if you're doing everything yourself through some other methodology, that can be a massive complication to undertake.
Yeah, I second that. I think that's the right call. I think, and the only reason why I bring it up is I have heard a lot of chatter of people
Hmm.
switching their tax bases over for 2020 in order to maximize the short-term win. But to your point, there are long-term commitments that come along with that short-term movement. So stay in the position in which you originally filed, and you're definitely in safe company.
Okay, I think we'll do one more question before we get to our little lightning round. This is from Jordan, and he's asking a question about forgiveness. Would equipment vehicles purchased solely for business operations qualify for the non-payroll portion of the loans, up to 40% of the loan? So yeah, just a question about big ticket fixed asset purchases. Where do we come down on that?
Well, the fixed asset itself, anything that's going to be going towards that is not going to be covered by a PPP loan, and that's because that asset is going to be having long-term benefits that go far beyond the pay period. And the Paycheck Protection Program is about trying to keep business operations sustained as opposed to adding value to the business, and that fixed asset doesn't really fall into that categorization. However, if you did have an auto loan that was in place prior to February 15th, 2020, the interest portion of those payments is going to be treated the exact same as a mortgage interest. But again, it's only for that interest portion, and you must have had the loan or lease or mortgage in place prior to February 15th, 2020. You can't be adding an asset to your business using PPP funds.
Yep.
Cool. Will, anything to add before we get to the lightning round?
Yeah, I think that's pretty spot on. Just think about round one, which was right to cover that mortgage interest, the rent, utilities, and just an expansion of other things that are really more short-term related to the benefit of the business, like technology, like staying COVID compliant, or securing your facility for COVID compliance. But yeah, second to I definitely +1 to Brandon.
All right, guys. You ready for a little lightning round?
Let's do it. Hopefully we don't get it wrong. Is there like a buzzer?
No buzzer, but hope I think you guys did your homework. I'm confident we're gonna nail all these. So these are relatively straightforward questions that hopefully just require a yes or no answer. But if you can add maybe a little bit of context, if you think that's helpful, we'll do it. And I didn't flip a coin, but do I have a volunteer for who wants to take the first one?
Just shoot it out there, and I think whoever jumps in there first, we'll get it.
All right. You got it. All right. Does a spent but unforgiven amount from a PPP round one loan reduce the potential amount provided by the PPP round two?
No.
Okay. If I took out an idle loan, that's an emergency loan that is administered by the SBA, can I still apply for PPP?
Yes.
We're getting it. Brandon and I.
Great.
Let me stop right there. There was a lot of confusion about that. Like, I took an idle. Can I even do a PPP round two? Let it be known you can do both. So go for it.
Cool. Does an idle loan count as income?
No.
Mm-mm.
My idle is being rolled over to my PPP. Would I need to pay anything?
Pay anything as in like a fee to roll that over?
Great question. I think you could read it in that context, but I also think I think the question might be because PPP are eligible for forgiveness. I think whatever portion of your idle remains, if it gets rolled into a PPP, I would assume it's eligible for forgiveness. Does that sound right to you guys?
I think we could do some research and get back to you. I've never heard somebody rolling an idle into a PPP, like a Roth IRA into like a traditional or something like that.
Well, it's essentially just refinancing it, right?
Well, that's what I was going to say. You still owe it either way.
Right. But the PPP is just eligible for the forgiveness.
Correct.
Yeah.
You're still on the hook for the idle.
That's an anonymous question. So if you can clarify, anonymous questioner, that'd be super helpful. Okay, moving on. I have 2 employees. One works 35 hours a week and the second works 2 to 5 hours a week. Do I qualify for PPP forgiveness? First time PPP applicant. So two part-time employees. Do I qualify for the forgiveness?
I think there was a calculation for part-times totaling an equivalent for FTE, wasn't there, Brendan?
That's correct. Yeah. And in that situation, you'd effectively have one full-time equivalent employee across those
Right.
two.
Right.
Cool. For round 2 loans received on, say, January 25th, can I use the funds to pay January 4th through the 20th payroll, which we're about to run?
Yes.
Yes.
Cool. Any insight on when the new form for borrowers of less than 150,000 will be released?
The new forms are actually available already for both the first and second draw PPP loans. Those application forms are out, and the new forgiveness forms are out as well.
Do payroll costs include owner draws?
No, they do
No.
not. Now, I know a lot of people are sole proprietors and sometimes look at their owner's draws as payroll. Like, yeah, I take payroll, which is really just an owner draw.
The distinction is very important, though. Yeah.
The distinction is very important here. If you're running payroll for the company, including your own salary, that's what counts, not
Yep.
your owner draws for that company. So think of like S corps owners who receive both payroll and owner's draws.
Yep. Only the payroll portion would be
Correct.
eligible, not the actual draw. Right. Gusto did a great job of calculating forgiveness on my first PPP loan. Thank you. You're welcome. When will Gusto have that calculator up again? Do we have an update on the calculator?
That's a good question. I could look into it. We could try to post it below. I believe we do, but I'm
Okay.
unsure.
Yeah, I haven't seen the latest on that yet, but we can definitely get back to you on that. Hey, here's a great one for Bench. Can Bench help with the employee retention tax credit? We haven't mentioned the ERC today, but there we go.
So we can't help with the employee retention credit because that's all done based off of your payroll. But I understand that you at Gusto, you have a system that makes it easier.
Indeed, we do. So part of the payroll features that we offer touch on items like that. So I believe we were waiting for more guidance around this. And obviously we learned last year that things were moving so fast that we wanted to make sure we delivered the right experience for our small business owners. So more to come on there.
Cool. Just a couple. We got about 3 questions left because I know we're over on time and we want to be respectful of everybody's time today. Is it cloud software that was purchased due to COVID distress, or does it include existing cloud software that my company had already been using?
It includes existing, actually.
Yeah. I don't think there was clear guidance there. There was gray most definitely in that category. So I definitely thumbs up to Brendan's response. It includes existing and new, or rehauled, maybe throw out the old and put in the new.
Can we file for a second round PPP if the first round PPP response was given saying, "Oh, I want to make sure I understand it, but I'm going to do my best to interpret here." Can we file for a second PPP if the first round PP response was given saying decline? Does that make sense to you? I don't know if I follow.
So basically, if they went for the first PPP and it was declined,
and there was okay,
and they're going for round 2, basically, would they be successful in round 2? I mean, in my opinion, I think to Brendan's earlier point, the conditions now are drastically different than the conditions in round 1. So I don't believe, and Brendan, feel free to toss in your thought here. I don't believe just because you were declined in round 1 doesn't mean you won't be eligible for round 2.
My understanding is different. My understanding is that for round 2, if you're looking for that second draw PPP loan, if you were unable to get a first one, you're going to be ineligible for that. And if you've been declined for a first draw PPP loan already, the eligibility requirements haven't changed for first draw PPP loans, so it's likely you would still be ineligible, unfortunately.
Okay, that makes a ton of sense.
Okay, final question. I am the owner of an S corp, and I'm the only one on payroll. Can I apply?
Yes.
Yep.
Yeah, definitely. Oh, and just one clarification. The question about the idle going into the PPP, she was asking if you had to pay it back. And so she's saying Square tells her that idle will go into the PPP. And I think that makes it eligible for the forgiveness provision that applies to PPP. Whereas idle, there's no forgiveness provision.
Yeah, we can definitely send you some more information. And I think we have her name and probably her email address from the registration. So
yeah. Hey, thanks to everyone in the audience for all your great questions. Brendan, Will, any final thoughts before we wrap things up?
just get in there, get your money, and spruce up the business with new technology. And, Bench and Gusto are here to help with that.
Yeah, I echo that sentiment 100%. If you haven't applied yet, start planning on applying, get your information together. We don't know how long these funds are going to stick around for, so move fast, look at multiple lenders, and get that money.
All right, guys. Will Lopez, Brendan Title, thanks so much for your expertise. Thanks for answering those questions. Thanks everybody in the audience for attending today. We hope this was helpful. We'd love to get your feedback. And so leave us some feedback if you've got comments, and we'll do our best to answer as many questions as we can offline. Guys, thanks for a great webinar. Thanks everyone in the audience. I'm Caleb Newquist. We'll see you next time.